PCE comes out, which is the Fed's favorite measure of inflation. So we'll look at that. We have tariffs going into effect. We have a lot of interesting data coming down the pike, and it'll be really, really interesting to see how all this plays out. If you thought it's been a wild ride so far with politics and interest rates and all this, I'll tell you one thing. So we haven't seen anything yet because there's so much more to play out this year. Even this month, we have tariffs coming online. We have the Fed fund decision in May and PCE, and these things are just kind of a glimpse into what the market's doing and what the Fed might likely decide. So when we look at PCE, core inflation in February hits 2.8%, hotter than expected. So when you see PCE going up, that actually is bad for interest rates, meaning it could be inflationary, and the Fed is not going to lower rates if things look inflationary. And they go through kind of the different indexes, month over month, core, which is kind of strips out food and energy. Mainly just showing that PCE was kind of flat. They haven't done all the revisions yet. Little more on the hotter side. So in May, I think it was an 85% chance the Fed was not going to do anything. They were going to pause. That jumped up to 89%, which just means the Fed is in a wait and see with tariffs, with inflation, and all this data. So there's really not a lot. It's kind of like playing poker, and it's the very beginning of the hand, and it's very hard to read what the Fed's going to do throughout the year. But looking at this data does give us some indication. Now, in the short term, with the PCE that came out, you see Treasury yields falling, which is actually good for rates. But in general, rates staying unchanged. We've been at this 6.82%, really kind of for a while here. This probably shows it better. Really since about the end of February to today, really jumping around. Again, we shot back up a little. So it's really hard to time the interest rate market. Most of the people we get, we're locking in, and then we have a float down ability if rates were to improve quite a bit. But again, in the short term, what's likely to happen? Rates are likely to be flat. Now, at the same time, mortgage applications have jumped. We do see an increase in buyers coming into the market. And one of the interesting things is FHA applications are up. And if you're a buyer, really over the last few years, FHA kind of disappeared, especially in a hotter market where you had really strong buyers. Now that we're getting a lot of first-time home buyers, FHA is a great program. We can pair it with the bond or other programs. It's lower rates, lower payments, lower PMI, lower debt ratios, more flexible on credit scores. So if you're a real estate agent and you see a FHA offer come in, don't assume that it's a worse offer than even a conventional offer, because sometimes it's just a debt ratio issue or something simple that FHA just makes sense. Or the buyer wants a really low payment and they're going to refinance down the road anyways, and so they may start out with an FHA. I like to look at Redfin data here where they kind of just look at trends. So both Mortgage News Daily and Freddie Mac showing rates down from 6.92 to 6.87. I should say down from those rates to 6.8 or 6.67. Touring activity up 37%, meaning more people are going out and looking at homes. It just makes sense this time of the year, and that would also push Google searches up. People say Googling, homes for sale. Again, that we're getting into the sales season, and this is when all this activity is going to start ramping up. So it's really going to matter what happens in March, April, May, kind of this selling season, buying season, to see what the housing market's going to look like as far as transactions go. Now, I've showed this chart a couple times where the forecast at the beginning of the year, we're about 4.2 million. We took out the highs and the lows. And the last read annualized was 4.15 million. So if we do get this 4.2 million, then that just means that we pretty much are the same as last year. And I've even seen Zillow and some other people moving those forecasts back. If I was betting, I would say this year is going to be a Groundhog's Day of last year. Lower rates, which is good. That's going to push a little more demand, but it's not going to go crazy. And whatever worked for you last year, the areas that I seen the agents doing the best is if they're focusing on listings, right? Because listings is definitely where the market's been. The more that you've skewed towards listings, the better you've done. Home flippers, I'll show you an article which was interesting, are down, meaning the amount of people that are flipping, but the flippers that I know that are doing well have went up, but they understand how to do that in this market. And then the last thing, there are buyers out there that are, or buyer's agents that understand these first-time home buyer programs and using these to give the buyer competitive advantage. And they're good at communicating to the buyer that the best first-time home buyer program out there is a motivated seller. And if you work with buyers, you are seeing, other than certain areas, closing costs getting paid, sellers doing repairs and stuff they haven't done in the past. So it is a very buyer-friendly market, more choices. And typically what people do, and I'm the same, is as rates fall, that's going to push people, but that's going to strip out some of that. But I think this year feels very similar to last year. Now, one last thing on flipping. I really thought this was interesting. So they start out by saying pandemic home flipping boom is long over, which is true. And when the rates were really low, everybody was buying houses. You could buy a house from a builder, and 6 months later was up in value. So we have gotten more experienced flippers in the market, and you can see as a percentage of existing home sales, we are pretty down from the peak, but we are still pretty high when we look at kind of back from, this is really probably the high of back in like 2005 or so. So we still have a lot of flippers in the market. And I would say if you're a real estate agent, man, you should definitely be flipping homes as a side hustle. That being said, you do have to pay attention, know the numbers, understand how to put together, maybe partner with somebody the first time so that you can do it correctly. But as a real estate agent, you are seeing that inventory first and putting yourself in a position to do that with a home equity line of credit or anything like that. Reach out to me because I do that. We have a flip right now that's going on the market, and I think it's a good opportunity if you're in the market every day like most real estate agents. So how many flip and fix and flip projects home flippers say they will typically complete in a year? A lot of part-time flippers, still 1 to 3, 65%, which just makes sense. But you still have a big chunk. You have 13, almost 30, let's call it 35% of full-time flippers looking to do, 10 or more, 7 to 9, 4 to 6. These are people that are actively in the market that are flipping homes. One last thing I thought was interesting as someone that just completed a flip, and I found this to be true. Where do you want to spend your money if you're looking at a house? Cosmetic updates and kitchen, right? If you're a real estate agent, that's what people buy in, right? They walk in, they see the kitchen, right? And then they look at just the overall cosmetic. And then I would say, for me, the bathrooms, right? Especially the master bathroom, and then down from there. Again, if you have any questions on flipping, there's a lot of better sources than me, but I have done quite a bit. So if you're a real estate agent, want to know what I think you should be doing is buying houses that have equity and actually keeping those houses, doing a cash out refinance, and then going to find another. That's how you truly build true wealth. So where does all this leave us? We're finishing out the first quarter of 2025. It's been fairly flat. We did get a nice drop in rates. We've been stuck at this 6.75 for about a month, which is a big jump down from the beginning of the year. I would say it's going to be interesting. Like I said in the beginning of the video, tariffs, we're trying to see some of this stuff what the Fed's likely to do with some of the inflation data. And the truth is we just don't know. Even the Fed is saying we're kind of on a wait and see trajectory to see how this all plays out. So we're going to look. I really think the next 30 to 60 days, we're getting into selling season. We got the tariffs going into effect, and we got the next May decision coming up. But more importantly, what does the Fed say about what they're going to do throughout the year? Right now, the market pricing into rate cuts. If that happens, we won't really see a change in rates. It's more if the market starts pricing in more or less rate cuts that we'll see a move. So we'll watch all that data. If you have any questions on this or anything else, if you want to know more about first-time homebuyer programs, let's schedule a call and go over those. This is Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week, and I'll talk to you soon.